So Nigeria's latest request for this amount, $1.5 billion US dollars from the World Bank, has been tabled today before the executive board in Washington. And this comes as both the World Bank and the IMF last week released two new reports in which the Buhari's administration was commended on its response to the COVID-19 pandemic. But as the IMF says, more needs to be done. So how much more needs to be done, and how and when? And joining me to chat today is Johnson Chukwu. Johnson is a policy analyst at the CEO at Cowry Asset Management. Good evening, sir, and good to see you on the program. As we were talking about the World Bank and IMF reports, Moody's released a new report just about an hour or so ago, and this is as fresh as it gets. The part of this report for me is this: the country's weak institutions and governance framework constrain the credit profile and have significantly affected Nigeria's economic growth and the government's fiscal strength. The keyword, the country's weak institutions and governance framework. Over to you, Johnson.
Thank you once again, Bossy, for having me. I mean, looking at that report, I wasn't exactly shocked by the opinion expressed by Moody's. When you talk of weak institutions, I mean, we have all dwelt on this severally. And we all agree that we do not have the bureaucratic institutions that make for vibrant economic growth. And if you even look at Nigeria's standing on ease of the Global Competitiveness Index, one of the areas of low score is our weak institutions. Our legal framework that ensure that legal issues are addressed timeously, the strength of the bureaucracy, where the government does not have the wherewithal to interfere in the affairs of managing the administration of the country. These are institutions that have challenged the rate at which economic recovery is taking place. And for me, Moody pointing that out is not strange, shouldn't be strange to anybody.
So the bottom line here is, according to the report, says the negative outlook right now on Nigeria means, according to the Moody's, that a rating upgrade is unlikely in the short to medium term.
Yes, I mean, they have looked at what our fiscal deficit. Of course, we know that, like Moody said, that we expect that to increase in the next couple of years. That the deficit will remain between 4 to 5%. I think it could go beyond that. Of course, this year, due to COVID-19, if you look at the revised budget of the federal government, the deficit is clearly above 5%. And the prospect of growing our revenue is quite weak. I mean, I can't see how the revenue can quickly be grown, but it looks like the government overheads have continued to balloon. Government debt service is increasing. And if you do not see a material increase in the price of crude and a significant increase in our production, we are not likely going to see a sharp increase in government revenue. So deficit is likely going to continue in the next couple of years. But to add to that, Moody's also pointed out that the credit rating of the country could actually worsen if the issues related to heightened insecurity is not addressed. They mentioned specifically the issue of Boko Haram, which we know has ravaged the Northeast. We also know that we're dealing with criminals, as they call them, in the Northwest. Last week, we are dealing with issues of school children being kidnapped in the dormitory. And we've seen instances where virtually the entire Northwest has come under some form of attack. I mean, Moody even pointed out that there's also a possibility of a resurgence in criminal activities in the Niger Delta. These are factors that will further weaken the Nigeria's credit rating and obviously weaken government revenue, and that could make it difficult for Nigeria to improve on her deficit to GDP ratio of 4 to 5%.
But despite all of this, when you look at the World Bank and the IMF report of last week, why are you surprised that the IMF and the World Bank commended President Buhari's administration in a number of reforms that's been carried out this year?
Yeah, Boston, you and I have also commended Mr. President on a few of the reforms. Particularly, I have dealt on the issue of having a market-reflective or what they call service-reflective energy tariff, and trying to eliminate the issue of subsidy or reduce the issue of subsidy on petroleum products. Of course, I have said repeatedly that we have not fully eliminated the issue of subsidy on petroleum products, but we've seen adjustment in prices, which unfortunately was reversed last week when the Minister of Labour was the one to announce that the government was coming down on the price of petroleum products at a time when crude price has gone close to $50 per barrel. So clearly, you're going to see an increase in subsidy. So I have actually advocated that the government should be bold enough to go the whole hog and take out subsidy and allow market forces to determine that so that we can get the full benefit. Because what we're witnessing today, we are suffering the cost of a deregulated market without getting the full benefit of the deregulated market if you do not allow for the deregulation to take place. But clearly, there have been some policy steps, positive steps. I mentioned the issue of cost-inflative tariff for energy sector, issue of reducing, I'm not saying eliminating, reducing the subsidy on petroleum products. These are clearly major policy achievement of the government. But we think there's still a lot more to be done.
Yes, the report says more needs to be done. So the IMF report focused on Nigeria's balance of payment problems. It causes recurrence balance of payments. Do you agree with some of the policy recommendations by the IMF? Do you think we can do it? How soon do you think we should do them?
Well, some of these things are all dependent on the political will of the government. And for me, taking difficult political decisions are done when you are far from an election year. I mean, the last election was last year. And ideally, in a democratic environment, such difficult decisions should be taken immediately after an election so that before the next election cycle, the benefit of those difficult decisions have materialized and the government can now show their thumbs and say, look, we took the difficult decisions. If you cast your mind back, we are now in a better position than we were before such decisions. I think, if you ask me, I think the decisions should be taken today to begin to restructure the economy. I agree absolutely with most of those recommendations. And you and I, in this several our engagement, have emphasized some of these recommendations.
Johnson Chukwu, policy analyst and CEO at Cowry Asset Management. Thank you so much for your time this evening for bringing us up to speed on this. Now, the Lagos Annual Trade Fair for 2020 was under COVID-19 for the first time in history. We'll talk about that when we return.